Welcome back to Legacy News. In this video, we will be discussing how we can invest in stocks as newbies. Before anything else, leave a like and hit that subscribe button so you won't miss our informational videos. Now let's get started. I witnessed the most peculiar investing chain way back, and I've always felt pity for newcomers who have recently hopped on the market. If you don't know anything, it definitely will be difficult to navigate through, hence leading you to this video. Today, I will share something that can enable all of you to soar through the investing margin. However, this won't magically transform you to an investing wizard, but it will help you drive through the right road. Part 1. I recommend 5 things that can optimize you even in the hardest moments in investing. Warren Buffett, a world-renowned investor, utilizes his own strategy and he counterattacks the greatest investors, leading to his long-term victory. Let's discuss more of that in this video. Average investors would now be distinguished from high-quality investors through few factors. During difficult times, the ones who are emotionally strong tend to hold up. Jordan Peterson, a clinical psychologist, shared a comparison. If we are responsible for a funeral of a relative, we should do the same in investing. When investors see their stocks skyrocket after a massive crash, 90% of them will have a change of heart. They will feel joy and share the news of how much money they have earned. Part 2. They tend to check on their stocks on a weekly basis, and that's how they curl up emotionally with the data's never-ending back-and-forth run. Moreover, a pint of these investors are the ones that support the plundering of stocks as it hints them that they can purchase more, hence giving them a lead chance in holding up for a long-term run. They know that the lesser they spend in investing, a higher return is waiting. This is Warren Buffett's concept of investing. The marketplace is filled with a lot of ridiculous people while everyone is pouring out, buying low and selling high. Poof! Just like that, you now have grasped how the system functions. If you want to be the first, you must invest in areas that fit your interest. As a recommendation, I would like you all to relax and self-reflect before diving into a game of stock. Part 3. If you're a freshie, you might dig into social media such as gaming, etc. And if you're a senior or some sort, you will be interested in more mature businesses such as technology and brandings. Buffett knows what he's interested in, and this method has helped him rise to the top. This has been roaming around for decades, and it is one of the most effective methods out there. He knows when to pick good investments, and you should take note of this as it reflects solely on your interests as you progress in the future. Peter Lynch, an investor, stated that you must know what you own and why you're holding on to it. Most investors' goals are to earn on their investments, sharing a drink with them and talking about what companies they own. However, they don't follow the track that they should be leading on, as a result giving them difficulties in understanding their ownership in terms of stocks. That's a lesson to all of you that shouldn't take these kinds of investors as your core teachers. All aside, what if I just took some random guy who knows nothing about the game and asked him to play with us for a game of poker? Then we agreed on betting $500 each. That person is stubborn enough if he agrees to my offer, as he just tries to fit in knowing he'll get dominated. Part 4. In the stock market, we could lose if we don't smartly invest. What newbies usually do is they get slammed after a few years into the investment scheme. It's normal if there is no proper strategy behind it, especially in this margin. Investing is a game, and if you're new to it and you manage to bag in during these rough times, here are the things you need to know before jumping in. The price-earnings ratio is one of the key assets of metrics to take note, as it measures how much you spend on stock. Another is to return on equity, as it measures the business efficiency at earning. Limit order, on the other hand, helps you in keeping control of purchases. These are important in starting an investment, since knowledge can be ranged on various strategies that can be applicable to personal preferences. Warren Buffett holds numerous methods, and one is purchasing a low intrinsic value. Next is the dividend aristocrat method, wherein a group of stocks is present where you can cop in costs average but can demolish long-term wise. Well, historically speaking, it's important that you should be focused in these. They are tactics that can be a big help in your investing journey. Part 5. One rule that's basic but hard to follow is this. As most investors check on stocks every single time on the market, the catch is, it is like being hit by a rainbow of joy. Every time news about it surfaces, most of the investors will lock and load for the short-term events that are bound to occur. Personally, I don't give too much attention to it, but it does weigh negatively on your investing journey as short-term investments don't bring massive returns. If you do long-term indicators, it will show you longer patterns and giving you a breath of fresh air. As an investor, bad decisions are ahead following the returns. That's why Buffett promotes only investing in long-term, as you can decide on the better end. If the market is bound to close in the near future, you should be confident and worry less about every news. You should focus on the cycles of the market flow, especially during times that it passes a critical phase. Stocks are periodical and you should get to know about it. Let me show you a graph of the market margin, and here you can see the behavior during the early mid stages of the cycle. It's mainly based on transportation, technology, capital goods, and many more. Part 6. Stocks gain success due to its expanding economy, so transportation is vital in the market. Technology stocks focus on media selling while they focus on products and media. However, if you invest in entertainment companies like Hulu, Netflix, and the like years ago, this was when the market has risen and is still doing so. But during the latter half of the cycle, the conservative options are the safest bet. The interests of consumers range from non-cyclicals to national healthcare. But this is the market downside. People still need to feed themselves, stay clean and healthy, so consumer takes on non-cyclicals as a safer bet to own. They also need a proper health support and healthcare stocks function during these later stages. As a beginner popping into the stock market, these are what you need to note of. You need to know what stocks bloom well seasonally. For an instance, you can purchase the strongest and most secure stock, but it remains in a weak category where you still can be defeated. Ray Dalio gives advice on investing and market history and is highly recommended investor to learn on. So if you're a starter in investing, I know you're swearing on why you are late than never. But at the end of the day, we should focus on the present marketing conditions. This guide can help you hover through the investing world and start your investing journey. Well, that's it for today's video. I hope you bagged tons of learnings. This is Legacy News. Please hit the like button and don't forget to subscribe. You can also let us know what you think by leaving a comment down below. And lastly, if you like watching videos like these, please hit that notification bell to be notified once I upload new videos. Thank you for watching, and I'll see you on the next video.